There's three big tax changes that apply in 2025 to small business owners and investors. And in today's video, I'm going to break down what matters to you. I'm Matt Sorensen. Let's build wealth. Now, one of the biggest changes to the tax code for 2025 affects those in the gig economy. Those of you that are self-employed, you're selling something on Facebook Marketplace, you're using Venmo or PayPal to receive payments from customers, you're using Airbnb or one of these places that pays you through an online marketplace or an online app. If you receive more than $2,500 from one of these services, they now have to issue you a 1099-K. Now in year 2024, the amount was $5,000, and in year 2026, it becomes $600. If you receive more than $600, you're gonna get a 1099-K. Now, most of these payment apps, Venmo, PayPal, have been trying to sort through this to make it clear what is business income someone's getting through PayPal or Venmo versus just a personal friend trying to split a restaurant bill that shouldn't be taxable income to you. So when you're using those payment apps, this is where you're seeing payments to friends and family in which PayPal or Venmo is saying that's not what we're going to put on your 1099 versus all other payments. So you've got to make sure that if you're using PayPal or Venmo or some other third-party payment app like this, Cash App, that you are segregating your personal use from your business use. In other words, you must have a business account that receives your business income and payments, and you should separate that from your personal account where you receive personal payments, stuff that would not be taxable income. Because what happens when you get a 1099-K is the IRS expects you to put that on your tax return as income, which you're going to be taxed on. So you want to make sure you're not getting the rent that your friend pays you through PayPal because you're roommates, the drinks you're sharing with a friend or family member, or the couch that you sold on Facebook Marketplace. You want to make sure this stuff is not popping into a 1099-K on PayPal or Venmo. Now, there's some other areas that are going to be messy on this thing, and this is a dumb idea. I wish the IRS did not come up with this rule, but here's some other problem areas we've already seen. People selling tickets on Ticketmaster or StubHub, they're getting a 1099-K, despite the fact that they had to buy the tickets and they resold them. Now I got to show what I paid for the tickets to determine what's taxable, because I only paid tax on the gain I would have from selling the tickets. Now, a lot of people that have season tickets or things like that, they don't actually make money selling these things. They're lucky to get half of their money back or maybe 2/3 of the money back of what they paid for them. But now this crap's going to end up on your tax return. Now, the IRS has provided a way, and this is the important takeaway here, for where you can claim that this 1099-K you received is actually personal income. It's not taxable business income. This is going to go on Schedule 1. So it's very important you understand this. If you get a 1099-K, you've got to claim it. You can't just say, oh, this was personal, this isn't taxable. The IRS knows you got that 1099. They're going to expect it on your tax return. And if you don't put it on there, they're going to audit you. So what you need to do is put this on your 1040, mark on Schedule 1 that is not taxable. There's a section on your Schedule 1 where you can do this. Now, the last thing I'll say on this is make sure you're actually looking online to your PayPal, your Venmo, your Ticketmaster, your StubHub, your Facebook Marketplace, Etsy. All these places are going to have to start sending 1099-Ks to you, but they're not going to show up in the mail. They're going to show up in your tax and important documents section of these apps. So you got to make sure you go grab these out of these places to make sure you're actually claiming this 1099-K on your tax return. All right, now the next thing happening in 2025 on your tax return is this is the last year of the Tax Cuts and Jobs Act. This is the last year for the 20% QBI deduction. This is the last year of the lower tax rates. The maximum rate is 37%. It's going to bump up to 39% in 2026. This is also the year you want to die because the estate tax exemption is going to get cut in half in 2026. So this is the year to die. This is the year to make all the money. You don't want to make it in 2026. You want to make it in 2025. But this is an important year because what we are likely to see from a Trump administration and a Republican Congress is an extension of most of these provisions. We don't know what's going to get extended and what's not. There's going to be tax legislation coming down, and hopefully the majority of these things will stay. QBI for small business. This is an incredible deduction for small business. If you made $100,000 in your business, you automatically get a 20% deduction, and you are only taxed if you made $80,000. Okay, that is huge, and that was what small business got out of the Tax Cuts and Jobs Act. What did corporate America get and large corporations? They got a reduction in the corporate income tax rate to 21%. It was almost a 15% reduction of the corporate tax rate down to 21%, but that was made permanent. All right, a lot of these other deductions only had a 10-year clock, which is now up here at the end of 2025. Now, the next big change, and this is for 2025, is the 1099-DA, that's for digital assets. This is for you crypto investors. This is a new rule going into 2025 that requires anyone who is a broker, I'm going to describe what that means here in a second, in the crypto space to report any proceeds that you may have received from the sale or trade of any crypto assets. Now, this 1099-DA is going to report the gross proceeds from the sale of any crypto assets to you and to the IRS as well as to your state. Now, you're going to then have to claim this on your 1040 tax return and, of course, pay the requisite taxes on this. Now, I've got some other videos that go over strategies how to minimize taxes on your tax return from the sale of crypto assets. Make sure you watch that video. I've linked it here. It's also in the description below. Now, the problem is the IRS has defined a broker as anyone who is in a position to know that you sold crypto assets. And they've specifically said this could be a centralized or decentralized exchange. This could be a hosted or unhosted wallet provider. So whether you're on exchange somewhere or off exchange somewhere, that entity, whether it's decentralized or centralized, is going to need to report this to the IRS, and they are deemed a broker as well as any hosted or unhosted wallet providers. Pretty much everyone operating in the crypto space here, providing services to crypto investors, is going to fall under this 1099-digital asset requirement, other than maybe straight peer-to-peer providing where you're one person selling to another. You're not considered a broker necessarily. You're actually the other party in the transaction. But this is a big new development for 2025. So for your 2025 return, it is more important than ever that you understand the crypto tax reporting rules, that you're working with an accountant who understands them, and they're possibly using a crypto tax software, depending on how much transactions you make, that is tracking all of this. Because you want to make sure you're getting the proper cost basis for what you paid for the crypto, that you're taking any losses from any sale of crypto where you may have a tax loss that can offset other gains that you may have that could otherwise be taxable. Now, if you want to gripe about this, I don't love it either, but write your congressman, or you can provide comments to the IRS about the requirement and the 1099-DA. Now, no matter whether we're in 2025 or it's 2026 or we're back in 2024, the tax strategies you implement is what matters on the money you get to keep in your pocket. So make sure you're subscribed to my channel, because I'm giving you these tax strategies here, also tips on how to protect your assets and better build wealth. I'm Matt Sorensen. We'll see you next time.